How to retire early. Smart investments for financial independence. Retiring early is a dream for many, but making it a reality requires strategic financial planning and smart investments. It's not about getting rich quick schemes. It's about making calculated decisions today to secure your financial freedom tomorrow. In today's video, we explore various asset classes that can help you retire early, offering long-term growth and passive income. So, if you're ready to take control of your financial future and make early retirement a reality, grab a pen and paper because you don't want to miss this. Let's talk about real estate, one of my favorite investment vehicles. Real estate provides two significant ways to build wealth: property appreciation and rental income. Over time, the value of real estate tends to increase, allowing investors to grow their net worth through property appreciation. When you buy a home or invest in rental properties, the price of the property typically rises, especially in high-demand areas. This means you're building wealth passively, without actively working for it. The second key benefit of real estate is rental income. Owning rental properties means you receive monthly payments from tenants, which can cover expenses or even generate profit. Imagine having a consistent stream of cash flow coming in every month, even without a 9-to-5 job. That's why I also want to talk about REITs, or real estate investment trusts. REITs allow you to invest in income-producing real estate like shopping malls, office buildings, and apartments without the hassle of being a landlord. You get the benefits of owning real estate appreciation and income without dealing with tenants or toilets. So, whether you prefer the hands-on approach of owning rental properties or the passive income stream of REITs, real estate is a powerful asset for early retirement. Next up, we're diving into the world of dividend-paying stocks, another essential asset for anyone aiming for early retirement. Remember, we want our money working for us, not the other way around. Dividend-paying stocks are like the gift that keeps on giving. Unlike regular stocks that only appreciate in value, dividend stocks provide regular payments, allowing you to earn passive income. Think of it like this: you own a piece of a company, and that company shares its profits with you in the form of dividends. The more shares you own, the higher your dividend payouts. It's like getting a paycheck just for being an owner. Now, not all companies pay dividends, but those that do are often well-established and profitable businesses. We're talking about companies like Coca-Cola, Johnson & Johnson, and Procter & Gamble, household names you know, and probably even use their products. By reinvesting, you're essentially buying more shares, which means you'll receive even more dividends in the future. Over time, you can build a substantial portfolio of dividend stocks that generate enough passive income to cover your living expenses. Chapter 3. Index funds, the simple path to long-term growth. Finally, let's talk about index funds. If you're looking for a simple, low-cost, and effective way to invest for early retirement, look no further. Index funds are like the superheroes of the investing world. They track the performance of specific market indexes like the S&P 500, giving you instant diversification and the potential for long-term growth. One of the best things about index funds is their low fees. Since they are passively managed, meaning they simply track an index, there's no need for expensive fund managers. And as we all know, lower fees mean more money in your pocket. When you invest in an index fund, you're essentially buying a tiny piece of every company in that index. For example, an S&P 500 index fund provides exposure to 500 of the largest US companies, including giants like Apple, Microsoft, and Amazon. By spreading your investments across hundreds of companies, you're reducing your risk. If one company performs poorly, it's less likely to significantly impact your overall portfolio. Historically, the stock market has grown at an average rate of about 7 to 10% annually. Investing in index funds allows you to participate in this growth potential over the long term. Investing in a mix of real estate dividend stocks and index funds can provide a balanced approach to achieving early retirement. By diversifying your investments across different asset classes, you're creating a well-rounded portfolio that can weather market fluctuations. So, start investing today. Stay consistent with your contributions, and watch as your money grows over time. Early retirement is within reach if you're willing to put in the work and make smart investment decisions.